the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation, a price moves up, the event happens, and then especially fast trading organizations sell on the news. But beyond that, I think will be just maybe a very short-term phenomenon.
In her most recent interview, Cathie Wood, founder and CEO of ARK Invest, warned against investing in Bitcoin and other cryptocurrencies. According to her, the news event could lead to a sell in Bitcoin due to the anticipated ETF. In Cathie's view, investors may be let down by the steep increase in Bitcoin prices that preceded the ETF approval, which might cause a sell-off and a subsequent drop in prices. Be sure to watch the whole video, because Cathie discusses the importance of considering the medium to long-term effects of a physical Bitcoin ETF, even though there may be short-term swings. Solana and Ethereum also benefit from her market analysis. Indeed, after being flat-out rejected on multiple occasions with little to no inquiry, becoming the subject of reciprocal questions this time around is both promising and indicative of the breadth and depth of the CC's understanding of the problems at hand. Thus, we are filled with joy, and of course, together with our partner 21 Shares, we are really encouraged. It seems like we've taken care of everything. We are certain that we have satisfied the CC. Regarding the messaging around the 29th, it seems like we have a lot of work to do here, so if you aren't going to be ready to go on or around, say, January 10th, then please don't send anything else to us. Once again, that's promising since it seems the SEC is taking steps to establish a timeline for itself. Okay, I see. Yeah, I suppose the most contentious issue, and this is something that has been reported in the media, is that for the majority of us, the question has been going to permit in-kind transactions. Is the primary payment method going to be cash, or is there going to be an effort to minimize the tax impact of transactions? At least initially. I believe it's cash, not in kind, as has been frequently reported. And I believe there are a few FSC employees who are mildly worried that banks may be compelled to deal with cryptocurrency. Since we are discussing a very technical matter, we cannot guarantee that they will be. Yes, it is highly technical, but it has been the main problem so far, and I hope we can find a solution soon. In my opinion, there will be repositioning for a variety of reasons, and I think institutions that have been hesitant may now feel comfortable moving forward after receiving approval from the SEC. A large preparatory move has taken place here. If the news caused a sell, it would not be shocking. That's a market expression. A lot of people are waiting for anything to happen, the price goes up, and then people who trade very quickly sell off the news. Beyond that, though, I fear it will be nothing more than a passing fad. In my opinion, the price of Bitcoin will be significantly impacted by the institutional push into the cryptocurrency. In fact, institutions are the single largest factor influencing our future price estimates. They won't have to cram too much in as they go. The assets that need to be distributed are worth trillions of dollars. We know that there are currently roughly 19.5 million Bitcoin in circulation, thus even a small change of 0.1 or 0.2% will have an impact. Forget about a one change. Nothing will change. That figure will not go over 21 million at the most. We anticipate that the price will start to reflect the scarcity value once institutions start to participate. Investors, asset allocators, and advisors need time to learn about new exchange-traded funds. Thus, the process is going slowly. But right now, the most essential thing is that we are keeping an eye on the plumbing, and the plumbing is functioning well. That is of the utmost significance. With around $2 billion assets, 21 Shares is the biggest pure-play ETP crypto provider globally. Most of that has taken place in Europe. The United States is currently experiencing this. The plumbing is in perfect working order, which was our main concern. Once additional investors and institutions get a feel for the market, I believe a spot Bitcoin ETF will stimulate. Ways to diversify will be desirable to them. In order to assist with actively managed diversification initiatives, we wanted to be prepared with those 5 tactics. Volatility is lower for some. Digital asset shares provide some with greater diversification. Once again, our goal is to become, dare I say it, the go-to place for anyone considering digital asset investment. Coinbase is something we're really excited about. I will return to my earlier statement regarding institutions. Caretaking isn't something that institutions are interested in doing. Other infrastructural and tax matters are what they desire. In the long run, what they care about is having easy access to digital assets like Bitcoin. The most liquid option to access exposure to Bitcoin, if we're correct, will be a spot Bitcoin exchange-traded fund. I believe that institutions will prioritize liquidity and the capacity to move in and out rapidly. Some institutions will choose to sit on their hands, and that's okay. For others, the ETF is a gateway to an entirely new market for investing. Because diversification boosts return per unit of risk, they will seek exposure at times. If they try to ignore it, I can see no way they can't. Accessing it in this manner is highly recommended. Something occurred this year that will likely influence investment choices for some time to come, in my opinion. As the regional bank crisis unfolded, Bitcoin's value rose. During the height of the crisis, Bitcoin gained about half its value as the regional bank index. Greece collapsed and Silicon Valley Bank went bankrupt. Thus, Bitcoin now serves a different purpose. And that's a risk-off asset as well as an asset risk. Let that sink in. Furthermore, what makes it so? The reason behind this is because Bitcoin is immune to counterparty risk, which is a problem in our banking system. I take it that it's totally decentralized and traceable by wallet address. This allows David Well, our on-chain analyst, to keep a constant eye on the network and detect any changes or suspicious behavior. That was clearly evident last year when Celsius and others went bankrupt. Bitcoin, though, was completely unfazed. In my opinion, it has thus far demonstrated its worth, and that is helping to educate organizations. Even though they didn't like it at the time, the regional bank crisis was a defining moment. So, we consider Bitcoin a hedge against inflation and deflation as well, so give that some thought. There is an asset risk and an off-asset risk for us. Similar to gold, its constant quantity makes it a hedge against inflation. Because of the concept of counterparty risk, it acts as a buffer against deflation rather than being directly affected by it. Therefore, it will be an integral part of many portfolios. In addition, our projections cover a period of 5 years, which is longer than the average investment horizon. It will replace physical gold for certain people, we believe. There you have it, a major actor. As previously stated, institutions will begin with 0.1 to 0.2 and, if our study is accurate, might increase up to 5. Introducing a new asset class typically results in that. Next, we have the developing economies. You may have seen that the presidents of El Salvador and Argentina have recently come out in favor of Bitcoin. And for what reason? For the simple reason that they have seen firsthand how poor fiscal and monetary policies in other nations have wiped out entire populations along with their purchasing power and wealth. And it's not limited to those two nations either. In other parts of the globe, it is accurate. As a result, the widespread acceptance of Bitcoin as legal money in developing economies should come as no surprise. That is going to be yet another major application. Remittances are slightly connected to that. When individuals get the hang of it, have wallets, and know how to transmit, it's really easy. Bitcoin for almost no cost whatsoever. In contrast, when American families attempt to send money back to loved ones in developing countries by Western Union, the fees might add up to 8, 10, or even 23% to the cost of $100. As decentralized money gains traction, we do believe smart contracts will become increasingly important. Additionally, both of those networks utilize smart contracts. There are advantages and disadvantages to each of them. But in our opinion, both are victorious. It says a lot that the developers have stuck with Solana after last year's issue, especially considering FTX was such a huge backer of Solana. Keep up with the developers, I tell you. They continue to support Solana without a doubt. Additionally, they are scaling in relation to Ethereum. Therefore, in our opinion, those are two potent networks inside the realm of decentralized finance. Additionally, we believe that the concept of decentralized finance, or DeFi, is a good one. After all, the original intent of the internet was never to host financial services or commerce. Because of this, developers in that era did not provide the feature. At the moment, everything that's happening with cryptocurrencies like Bitcoin, Ethereum, and Solana is that their creators are implementing native currencies and creating drastically simplified financial systems with fewer intermediaries. Quite a bit more effective and efficient. much like the internet.